Hello class and welcome to our 7th lecture series on Managerial Accounting, and I'm your instructor Jamal Haider. We were discussing our chapter 6, which is cost volume profit relationship, and we talked about a lot of variation, in which we also talk about that what happened if we increase our variable cost, what happened to the profit, what if we increase our sales price, and what if we increase our fixed cost. And then we saw that the impact of fixed cost is huge. Okay, so we will continue the same example. The RBC company, which is racing bicycle company. So it has its contribution margin income statement as shown here. So total sales are 500 bikes are sold. The price of each bike is 500. Their variable expense is 150,000 or 300. Where 300 came from? 150,000 divided by 500 units. And contribution margin is 200 or 100,000. Fixed cost 80,000. So currently it is operating at 20,000 profit. Okay, let's move further. Change in regular sales price. I think we did that one. Okay, let's do that again. So if RBC has an opportunity to sell 150 bikes to a wholesaler without disturbing sales to other customers or fixed expenses, what price would it quote to the wholesaler if it wants to increase the monthly profit by 3,000? We talked about that. How much profit per unit he wants to charge? Answer 20, right? Sorry, 200. It's 150, then it's 20, right? So the question itself says fixed expense not going to be disturbed, right? So it means we are not going to charge any fixed cost here. So we know that 300 is our variable cost. So 150 bikes do increase our variable cost. So 320. That's it, right? So it means you can also solve this to an through another way. You can also prove that. So if you sell the bikes 320, 150 bikes, you will receive the revenue 48,000. The variable cost is going to be 300 multiplied by 150, 45,000. So your profit will be 3,000, right? Okay, here's a class exercise. So this is a graded activity. So I'm going to put you in breakout rooms. All you have to do, you need to solve all these 4 questions. I'm going to give you 20 minutes to do that. Please take a picture. Meanwhile, I'm making or setting up breakout room. That recreate. Here we go. If everybody has the pictures, I'm gonna open the breakout room. Guys, please accept the breakout room.
I didn't get any message for the breakout room.
Really?
Yeah.
It says you are in room 1. William joined. Leo, did you get it?
Nothing.
Nothing? Okay. Let me move you to another group. Then maybe it will reappear. You get it?
No. Maybe I leave and come back again.
Okay, then do that.
Hmm.
Okay, Leo, I found out, and I'm gonna transfer you to Breakout Room 3. You get it now?
Yes. Now I get it. Okay. Thank you.
Okay. So I'm gonna pause the video here because after 20 minutes, I'm gonna be answering those queries. So please do watch our video. Okay, guys, group 1, did you finish this individual class participation activity?
Not yet.
How much time?
Not yet.
About 90%, so maybe like 5 minutes more.
Okay, take 5 more minutes and do that, please.
Okay, thank you.
2, did you finish your class participation activity? Minsu, I received yours. Crystal, Halima, Sunho.
I'm fixing my answer.
Yeah, I'm also finishing up writing.
Okay, good, good. Take 5 more minutes to do that. Okay, group 3. Have you done your class participation? Leo, I received yours. Chimay,
Yes, I finished.
Almost done.
Okay.
Almost done too.
Okay. Take 5 more minutes and then please do that. Send it to the group. Okay, guys, welcome back after a breakout room activity. So I have received your files. So I also pasted a solution here. So please match your answers. So first, net operating income is 68,000. Second, net operating income is 42.5, 42,500. 3, 52,500, and 4, 59,600. So you can also compare your answer from this solution as well. Okay, before starting the next LOS, let's take the attendance, and then we will be having a short break. So please attend first. Minsu.
Yes, sir.
Stella.
Yes, I'm here.
Alima.
Here.
Okay, Alima, you were not present in our last lecture, right?
Yes, I was not.
Yes. Alima or Leo? Alima. I was
Alima.
not present. I will send you the audio if it's okay.
Okay, okay. And then we have William.
Yes.
Landry, are you here? Still disconnected. Landry. Okay, I think he disconnected. Sunho.
Yes, sir.
Okay, and then Jackie,
I'm here, sir.
Timay, Leo,
Yes, I'm here.
you were also not present in our last lecture.
Exactly.
So what happened? You were a very regular student, one of the rare students we have.
Yeah, I had with my thesis, I had an interview going on during that time.
Okay. Camila,
Here, I'm here.
you were also not present at that time. Last
Yeah,
lecture.
I wasn't there.
Okay, and then Crystal.
I'm here.
Okay. Okay, let's take a 10 minutes break and then we start again. Let me pause the recording here. Okay, now our fifth learning objective is determine the level of sales needed to attain a target profit. Let's talk about that. So we can achieve this through either equation method or either through formula method. Essentially, these two are equal. They just, rename that as equation method or formula method. We can derive the formula from equation method as well. Here we go. So we know that profit is equal to, let me just derive it for you. So we know that profit is equal to sales minus total cost, right? So sales minus total cost can be divided into variable cost plus fixed cost. So sales minus variable cost minus fixed cost, right? Is equal to your profit. So if we want to do it per unit, so we can expand the sales at price into quantity. We can also rely on per unit fixed cost because the behavior of